So Michael Burry's 13F finally came out, and this one is a pretty interesting one because it has a lot of many mixed views. But first I want to focus on what the media is paying attention to and what everyone is surprised about, which is crazy and nobody should be even surprised about this. And this is his Apple put. It's like, oh my god, he's shorting Apple. 17% of his portfolio is shorting Apple. And why short Apple? It's one of the biggest companies in the world. It has a wide moat. Why would you short a company like Apple? Well, me personally, the people in my Discord chat, they know that I also had puts on Apple and I'm still holding them. So I can give you my perspective on it. Now, Apple itself, the company, is amazing, but it's pretty expensive, especially compared to Google and many of the other big tech companies with a pretty big moat as well. Now, I personally remember buying Apple in 2018 around the 16 PE, 16 PE for Apple, and I thought it was a pretty fair price. Well, Apple went from a 16 PE to trade over a 43 times earnings. Now, the margins of Apple did not go up that much, but the company got bid up a lot, mainly because it's in the S&P 500 and of the passive investing, which Michael Burry, an index fund, which he talks about a lot actually. It really helped to prop up the price of Apple. But if you think of Apple, it's not gonna keep growing a lot forever. And we have kind of a lot of things with consumer spending starting to slow down. Maybe people are not gonna afford to buy all the Apple things they used to buy before. Credit is getting more expensive and inflation is putting a lot of pressure on those wages. So I think this is the perfect time for Apple to actually comes back to earth, because it went way beyond earth, even to the skies, sitting at 24 times earnings. That's a lot for a company like Apple. Apple should trade between 18 and 20. Google is a pretty amazing company, growing 15% a year. They have Google Cloud and everything, and yet Google, which Michael Burry bought, is trading at a 21 PE, a forward P of 19. Now, looking at Google, the last time it traded this low, it was in 2012 when it traded at a 21 PE. So you could see the difference between Apple, Google, and even Facebook, which Michael Burry actually owned. So for me, it was never a surprise for Michael Burry to buy puts on Apple because it's ridiculously expensive. Other than that, there was a lot of mixed views and questions around Michael Burry's action. They said, okay, Michael Burry is bearish on the market. He's putting all those negative tweets, yet he's buying stocks. He bought 10 new stocks, including, Warner Brothers Discovery. He's back in the stock, Google, Facebook, OVV, many other type of stocks, STLA, which pays like an 8% dividend. It's a car company that owns, many popular brands like Maserati, like Jeep, and it's a pretty good company and actually pretty undervalued. I'm gonna do a video on it in the future. But the question is, why would Michael Burry buy all these stocks if he's so bearish on the stock market? Why would he put, for example, 9% of his portfolio in Booking Holdings? Why would he put 10% of his portfolio in Warner Brothers Discovery? Why would he do that? Well, the answer is we don't really know what percentage of his portfolio is actually in those stocks. For example, Apple put, I'm sure it's not 18%, but it shows the amount of shares borrowed, but not the actual premium that he paid for the option. Now, Michael Burry might have international holdings. It's not going to be in the 13F. He may have, credit default swaps. He may have other derivatives. He may have many. If he shorts a stock, it's not going to show up in the 13F, the shorting positions. So he may have many other positions, including cash, which we can't really see in the portfolio. And if you want to copy Michael Burry, is one of the hardest investors to copy because he may already sold all those positions that we're looking at right now. I mean, you never really know. He sometimes hold the stock for a few days, for a few weeks, and this kind of sheet, the 13F, is delayed 45 days ago. So he may already have sold those stocks and he may have short positions that we don't really know. But from me looking at the things he bought, including healthcare, some finance, some energy, and he's kind of buying something that's big, that has some kind of moat, some kind of competitive advantage, and something that's very, very cheap. And those kind of stocks tend to hold up better in a bear market. And I'm sure he has maybe a lot of cash, he has other derivatives, maybe credit default swaps or whatever he may have, but we can't really see it in the portfolio. So no, I don't think Michael Burry is turning bullish, because all the things he mentioned about overvaluation in the market, about the Federal Reserve, about inflation, all those things are still here. They didn't go anywhere. So I don't really think Michael Burry is getting bullish. And if he was so bullish, I don't think he would have a put option on Apple. So this was my take on Michael Burry's portfolio. I'm gonna take a deeper look in every single stock, maybe in the future, maybe STLA, maybe OVV, and many of those other stocks. So if you'd like to see those, make sure you press the like button, and maybe consider subscribing. So I hope to see you in another video.